doesn't like a bit of a cake in a box? Hey, I prefer a cake out of a box, isn't it? My wife's birthday, so I bought a cake in a box. Not from Cake Box, though. And they are largely a franchise business. So Cake Box, they are 40. In fact, they've gone up the rank here. They've gone from number 79 in the MicroCap League up to 43. Cake Box Holdings. Let's click in there. So they are a franchise retailer and manufacturer of cakes. The growing store base across UK. First concept in East London in 2008, mate. All right, fancy a cake, egg-free. The eggs are free, mate, yeah. No, they are egg-free, aren't they? If you go to eggfree.co.uk, that's their website. Anyway, there are quite a few hundreds of those now. So let's look at the tail of the tape. Share price, 175. Target price, 220. That's what brokers are saying. Upside, 25%. Market cap, 70 million. Enterprise value now in the green. You see, 62 as opposed to the last that we looked at. So that means they've got more cash than debt. Revenue, 37 million. What's the market cap? Let's say 70. So operating profit, 6.4. Cash, 8.4. Debt, 1.1. Operating cash flow, 6.2. Free cash flow, 5.1. Dividend yield, 3.49. They must have a dividend as well. I like a dividend. Having a cake and eating it, yes. Share price rising and dividend. That's what that is. So get ready with your cake puns, all right? Any kind of cake puns you can come up with. Total growth, 12%. Fine, double digit. Total value, it's double digit. Total momentum is good. Chart is looking good. Health is good. Efficiency is good. Potential, not huge. 25% is fine, though, but plus the dividend. It took me 27%. So we're looking around about 40%. That will get in the green on that. But remember, that's just targets. Share prices, when they've got momentum, they can go way beyond that. But it's always nice to have a sort of ballpark figure of where the valuation target is. Okay, so this is to the 31st of March, 2024. Revenue up 9%. Operating profit growth at 15%. Net profit 10% from last year. Operating cash flow, no change. Free cash flow up 16%. So decent enough. Price to sales 118. Price to earnings 15. PE 15. Price to book 3.6. EV/EBITDA, because they've got a nice bit of cash, 8, that's fine. And price of free cash flow, okay, 14. It's okay. This is all okay so far, I think, in my mind. Health, even though they're eating lots of cakes, they're quite healthy. So net cash this time, 7.3. Gross gearing, just 6% gross gearing. And the current ratio, plenty of cash, plenty of short-term assets to cover those short-term liabilities. That's good. Efficiency, it's good. This is like a franchisees company, so you tend to have very good margins on these businesses because, of course, the cost is down to the franchisee, not the franchisor, because of course they pay for everything. There's the franchisees, so they pay for marketing a lot. So there's less stuff from them. They pay for this produce. So operating margin 16 and return on capital. Look at that, 26.25. That's quite good. It's improved as well since last year, or the first half, from 21 to 26. So all in all, just a quick look at the figures. Yeah, okay. Yeah, okay. And look at that. They've gone from net increase in cash or losing cash in the half year to 1.1 generating. That's after dividend payments, I'm assuming. So just a quick look at the old chart. The old jam tart. Hey, the chart. Look at that. You can see here, can't you? Straight away, we get come down off a cliff. This is we had issues with the CFO, wasn't it? Someone sort of wrote an article on discrepancies in the account, and in the end, they just got rid of the CFO. Just give him a cake and got rid of him. And you see it broke down there. 200 moving average, the share price broke down there, and didn't touch 200 moving average until here. And since that date, look, 200 moving average, see, eh? Since that date, you can see it's formed pretty much, in fact, from here really, even, but you see a series of higher lows. I mean, the upsize, the higher highs haven't been massive, have they? They've gone from what 120, but nevertheless, it's you've got this flattening out a bit. Be nice to get above that. It's closed once or let's say above, where is it? 180. I would say nice close above that now. A couple of days close. There's only 1 day to close above 180. If we can do a couple of days above that, then it'll maybe start to revert upwards. But yeah. Okay. All right. What do you reckon? Ladies and gentlemen of the jury, show us your desserts. Alex, kickbox, yes. Margins, good. Return on capital employed, cash flow, all good. Price earnings ratio, good. PEG, high quality, could improve with the upgrades. Do have a record of exceeding expectations. It's a thumbs up from Alex. Alan, cake, one for the watch list and invest when the growth accelerates. Yes. And I think, is it? I don't know. I don't suppose it is discretionary, is it? Because there's, people have birthdays every single day. Anyway, Gareth, no kick for me. Trying to lose weight. Okay, yeah. Well, yeah, I suppose so. I was going to say there's no reason to buy the cakes if you're a shareholder, but surely if you become a shareholder, you'd want to test the merchandise. Chris, if we all buy some cake from them, the share price will go up. Yes. We'll be happier though, generally being more unhealthy. Mims, price earnings growth for year ending 2024, agree, high 1.9, but for this year going forward, 0.8, which is fine. Anything below 1 is good. Am I missing something? No, I don't think you are. I think it's looking all right, isn't it? I mean, like I said, let me just have a look at the a quick go back to the so what I've got here is well, I've got 31% over the next couple of years. I'm based on 2 times sales, 10 EBITDA, 15 pre-tax profit. What's the margins, operating margins here? Operating margins 16. Yeah. Well, yeah, I don't think. Again, I'm just I think there's margins of there's multiples. I'm giving it 5. You could probably go 3 sales there. Would you at 15, 20 PE maybe? I don't know, but it's not, it's like I said, the growth forecast isn't huge. 7% top line pretty much. So I wouldn't push up those multiples much more. And so I just think those margins are fine for where they are. Yeah, there we are. Gadge, yummy. Phil, ignore, not sure where the growth will come from. Wait for the price to get beaten down. Maybe yes. Are they going abroad? Maybe I don't know. They could expand elsewhere. Who knows? That's another risk, isn't it? Tim says no pudding for me. Brian, watch list. See if it breaks out. User, user. Is there much demand for egg-free cake rather than normal cake? Business doesn't excite me. Hey, that's okay. Mark V, mouth-watering, tempting. If it breaks, yes. David's iPhone. Where's David? See more downside risks than real potential. Yeah, it's. I think it's fine. I think you can make a nice little return on it. This is my opinion. I think it's quite. It's one of those things, isn't it? I think it's like a cake. Stuffing it on. But after a while, I think, should I have had that really? Should I have eaten that cake? I don't know what I'm trying to get. I think you get a fine return. I don't think it'll blow the lights out. Saying that, again, you can never predict these things because if there's lack of supply in the shares, and let's be honest, they are improving. The return on capital is improving. It seems to be an uptrend. They got no issues as far as balance sheet is concerned. It's just there's no way of predicting whether demand will grow or anything that is there. I mean, I often hear people making predictions about markets or sectors, and I think it's quite hard in this case, isn't it? So all you can go by is the figures, So I mean, if you see a trading update come out that shows they're growing now, maybe then, maybe they upgraded. So we are. So I watch it. I'm not hugely convinced. I want a part of it. Do I want a slice of that? Do I want to share? Do I want to share that cake? I'll give it a thumbs up though. It's on my watch list.